Well, Qualcomm, the world's largest maker of mobile phone chips, is buying Atheros Communications for about $3.2 billion in cash. That news was confirmed this morning. The deal broadens Qualcomm's lineup of Wi-Fi networking technology. And joining us this morning over the phone to talk about that is Capstone Global Markets Special Situations and Mergers Arbitrage Specialist, Sachin Shah. And also staying with us is Brian Belski from Oppenheimer. And Sachin, did Qualcomm need to do this deal?
Hi, Betty. Good morning. Happy Wednesday. Yeah, it seems like that they did. And the reason why they basically say in the press release that they're looking for more growth opportunities. One thing that's interesting when you look at the most recent financials for Qualcomm, they spent 23% of their R&D coming from sales, and that extracted just under 6% of sales growth. Okay, so they're deploying a lot of R&D, and Qualcomm's historical background is not to do deals to actually grow organically. And so this deal is not only a growth opportunity, it's also something that they basically somewhat articulated in their growth presence, or increasing their growth presence in Wi-Fi. And what's also interesting here, Betty, is that a little over 80% of the company that they're acquiring, Atheros, is coming from Asia. So 80% of the sales is coming from Asia, and so this is not only a growth opportunity, but this is also an Asia play.
It's a bet on an emerging market or emerging markets.
Yes, Taiwan, China, Hong Kong, Japan accounts for 83%.
And the point that you make, though, that they normally would like to grow organically, but they found this opportunity to, for growth here. They also did that. Didn't they also do this because they were sitting on $10 billion of cash, and at some point they needed to deploy that?
Exactly, bingo. So I mean, so the fact that they have approximately $10 billion in cash, approximately $9 billion in net cash. They're generating free cash flow. They're looking for that growth. So they're not happy with the fact that they're growing 5 or 6% sales growth or top line. And so this is one way, in addition to still deploying capital and resources to R&D, of basically maximizing shareholder value. And this is unique in the sense that they haven't done this before. And so I think as you're seeing some of these companies that have had strong or leadership market share are going to start doing these type of vertical deals.
Brian, that's right. I mean, a lot of these companies have a lot of cash.
Well, the key thing is whether or not this is a mutually exclusive event or something broader within the group or the sector, whether or not the sector is buying more cash or a product cycle or R&D, and those are kind of three separate things, but clearly this is a very positive thing from our viewpoint with respect to the overall technology
But it sounds like, Sachin, you're saying that this is going to be the start of perhaps more?
Yes, this is, the 800-pound gorilla, Betty, at the end of the day, is Apple, okay? And so everybody's attacking them. If it's Microsoft, if it's Google, in this case, indirectly, it's Qualcomm. So Intel is doing a deal with MFE, okay? And that is software, okay? They're in the hardware business. They're acquiring a software company, okay? So there has been some speculation that even ARM, which is based in the UK, which is another chip maker, and Microsoft has been reported by the Wall Street Journal that they're looking to sign some deals with ARM. And this is interesting, where you're seeing technology companies that have done past deals are looking at new ways of accelerating their growth.
Right. They need to, accelerating the growth. You hit that nail on the head. Sachin, we have to leave it there. Thanks so much for joining.